Hey everybody, welcome back. Okay, so I'm going to do a trade review today. I'm going to try to keep these videos really short. I'm going to try to do them every day, and we'll see how it goes. So what you're looking at here is my first trade of the day, based off of my order flow read and based upon my custom algo that I've built. If you are interested in that algo, and if you head to my website here, go on services, you will see the algo indicator package for 360. You can use it with thinkorswim, but also I have a trading view version of it. I just have to get that ready in the next day or two. It's already ready. It just, if you want to use it on trading view like I'm using it here, I just find the visuals on thinkorswim are much clearer. But if you do want to use it on trading view, here it is. Okay, so let's review this trade. So I've written out everything that I saw in this particular trade. So I got in the off of this 1 hour rejection here, and let's just review what I did. So you can't really see it, but my algo lighted up purple here the day before, which was Friday, and what that means is it's an overvalued condition. And when you're doing an overvalued condition against the trend, you want to take really small size. You don't want to do anything with big size. Counter trend trades are not very reliable, and so I usually do like 1/4, 1/3, or half size. So right off the bat, you can see it was a counter trend trade. I did half size in an overvalued reading. Now you might say, Steve, well, it was overvalued here. Well, if it was overvalued there, it's even more overvalued here, and it's even more overvalued here. So especially counter trend trades, what I really like to do is I like to get like double or triple overvalue readings. So when this candle structure came in here, and all I'm looking for is I'm looking for a candle that closes in the bottom 10%. Everything else that you've heard about candle structures, dojis, all that nonsense, don't pay attention to it. All that matters is the close of the candle. And in this particular case, this candle closed in the bottom 10%. And right away, boom, I got an instant reaction. And what I did was I took the trade off down here at liquidity, and I had the strong rejection candle at 8 a.m. Topside liquidity was taken out on the 1 hour from the London session. What do I mean by that? Is you see this little level here that was put in during the Asian session, right? Well, what happened is, I don't know if you can see the colors clearly, but the light blue is the Asian session and the darker blue is the London session. So what happened is we went up and we slammed that Asian session liquidity and we rejected it, right? And now I'm in the London session, and there's the candle in the London session I took. So what I'm saying is this liquidity got taken out from the Asian session and it was rejected. And I held the trade down to, I was scaled out of the trade, and there you have it. Now the other reason why I took this trade is there was previous strong rejection on the 15th and 16th. So you see this rejection here during New York on the 15th and 16th. So that was that's very positive. That's telling me somebody is selling that level, even though it's a counter trend trade. So that was another reason why I took that trade. The daily as well too. If we look at the daily, it's a bit harder to see here, but you can see I'm at a level here on the daily, and a big level here going way back to the March levels. So there's another reason why I took the trade on the 1 hour, and the trade worked out great. Okay, next trade was the EURCAD. Again, this is a counter trend trade. Now I happen to like this one more. I gave that other trade a 63% probability of working. This trade, I decided to give it more like a 67% probability of working. Now, I'm not telling you everything that I teach my students. There's obviously things I'm holding back here that are proprietary information that I can't give away in a free video. But I'm giving away like a good chunk of things here that will help you trade. Obviously, if you want to know more, you would have to take my full coaching. But in any event, let's review the trade. So here we have a counter trend position. So again, we're going a half position size here. We have a double overvalue reading. So in this case, there's my first overvalue and there's my second overvalue reading. Now I like this trade more, especially because you can see this big rejection here. Now the size of that rejection is quite substantial. I mean, you're looking at a 1% or 143 pip rejection. That's big, right? 1% is a big move in the Forex market. So I like this trade more because of this rejection, a double overvalued reading. I still only stuck with a half a position size trade on there. Now daily liquidity was taken out. Now this is another reason why I gave this trade a higher reading, because as you can see here, this big daily liquidity level was taken out, as well as this liquidity level. So I like this trade more. I gave it a higher degree of probability of working. So when you combine that all with the overvalued reading, there you have it. Now there you have the actual entries and exits if you really want to study this, but $1,400 in profit. So all good, all very, very, very good. Very happy about that. And just two other things I want to mention quickly. On Friday, I had mentioned 3 day trades, 1 day holds. These are 24-hour holds. AEO short, ANF short, and GES short. So let's take a quick review of those. And you can see I opened these trades at 3. Open these trades right on the close on Friday. 1 winner, 2 winners, and 3 winners. Boom, all back to back, and that gave me a beautiful 5% profit on the day in the room, shooting my room profits up to 219%. Okay, so I'm trying to keep these videos short. If you are interested in my algo, you can head on over to my website. It is only $360. It is powerful as all hell if you follow the rules with it. And if you think my algo is powerful, if you take my full coaching, you will be blown away. Okay, thank you and love you all, and bye for now.